Okay, so here is how you raise an order. In this particular example, it's a short order using the Bybit trading platform. Now, this is the Solana USDT perpetual contract, the 12-hour. I've nominated that there is a tradable opportunity here. It's a downward trend. It's a cradle right here coming off an old support level in the cradle zone, rejecting these highs. My entry is going to be underneath the low of this particular candle. My stop is going to be just above the high of this particular candle. So once I've found that trade, after going through and doing a full scan and going, okay, this one fits the bill, what I then do is I come into my Bybit trading platform. Now you've got a whole range of different order types in here. The one we're going to be using is conditional. You can see that what I've got here with my margin, I've just chosen times 10. That's all that I need. I'm happy to use that, and that's what I'm going to use for this particular example. Now the conditional order means that what happens is I can actually set a price at which the order gets put into the market. So in this case, before I put the details in, I need to find my entry and stop loss. The best way to do this is to always have a notepad or a piece of paper close by. You can write down, like for example, what I'll write is SOL, S-O-L, then I'll put E equals, S equals, and then size equals. The E is the entry, the S is the stop loss, the size is how many contracts I'm taking on this position. Now, I'm going to hover over this candle as I want to enter as it breaks the low of that candle. The low of that candle is $18.75. So my entry will be 1 cent below that, one price increment. So 18.74 for my entry. So I'll write that on my piece of paper next to the E equals. Next to the S equals, I'm taking my stop loss based off of this candle, the high of this candle. The high is 19.31, so my stop loss will be 19.32. With that information now in mind, I come across and click conditional, as you see here. I put in my trigger price of 18.75. which of course is the low of this. So as soon as it hits the low of 18.75, I want my order price to be raised at 18.74. So when 18.75 hits, boom, my 18.74 order goes zip into the books on the sell side. Now what I now need to do is I need to do my risk management. And for this particular example, I'm just doing an example risking $100. I hit this little calculator button up here, which brings up this little dashboard. I then click across to short because that is the direction of my position. I put in my entry price of 18.74. I put in the close price, which would be my stop loss, of 19.32. Now I need to work out how much, I need to get this to about $100. So if I do say 200, what is that going to tell me? And I got to put in my leverage. So at 200 Solana selling short, I'm risking $116. I don't want that, so I'll go about 170. That's 98, so 175. There you go. 174 is the amount that I wish to sell of Solana with 10 times leverage with my entry and my stop loss as you see it. Okay? Now, then I put down where in my piece of paper where it says size, I put equals 174. Now, once I've done that, I go then away, boom. I come over here and I type in 174 into the quantity area here. Now what you'll see down here is a number of different options. The only one that I'm interested in right now is this one right here. I click on that button, it brings me up the additional stop loss, okay? So for a start, I'm going to have my stop loss. What did I say? What is it? 19.32. And you can see here, adjusted, it's $99. So that's the expected loss if my stop was to be hit there, which is absolutely fine. It's a slightly different number to what we saw before, but it's bang on that $100 mark. I can also put in a take profit order here if I wish to close the entire position, if I would like to do so. Now, in this case, I'm not going to do that right now. What I'm going to do is I'm just going to, because it's got an entire position, or current order. Same thing, really. I hit confirm. When I've got this, it brings up, it brings it over here, so it's ticked. It's got all the details in here. I hit sell short. Now I can come across and check. My trigger price, $18.75, which is the point at which I want my order to go in. My order then goes in at $18.74 for 174 Solana. With my trigger price, my stop loss trigger price at 19.32. Double checking that across what I've written down on my piece of paper. I'm happy with that. I hit confirm. Now you'll see down here the order comes into the book. It's got my stop loss at $19.32, and it has my order price at $18.74, which is where I want to be filled. If I click on this now, this little drawing picture, I can come into my take profit right here. Now you can see down here it says for my stop loss, 19.32, that's my stop loss price, it's minus 30.4. So for me to get an exact one-to-one, it would be 30.4 here, and you'll note the amount for profit here now is 99.18. The amount for loss is 99.18. It's exactly the same. Now, what I typically do is I add a little bit in there for the fees of taking the trade. Just a little bit. In this case, it's what, 1.6. So it's a little bit lower at $18.15 for my target to be hit. Okay? This is to close the entire position. So if I go ahead now and hit confirm, you'll see that that comes in down here with my take profit there on one side, the stop loss on the other. Now, if you don't want to close the entire trade out at 1-to-1, 2-to-1, whatever margin it is that you want of profit, the best thing to do is to not have a take profit in there and wait for the position to fill. Once that position is then filled, you can go ahead and you can add a take profit, which will close half of that position. Now that's if you want to wait until you get into the position. So here we are. I am now filled in this position. Now what you'll note is that the number is different because the position that I want to actually take, the example is $100. I think it's $250 or something like that here US that I would actually want it for this position. Relatively small position, but I didn't want 100. I used that as the example. Now you can see here the whole position is now in. All right, I'm short 400 Solana, cross margin times 10. My stop loss is where it needs to be, and everything is good to go. Here's the stop loss here at 19.32. Now what I can do here is hit this button to put in my scale out. You'll see this little box come out. It says modify take profit stop loss. You see you get your entire position here and you've got partial position. Now unfortunately it's a bit frustrating because there's not a partial position close when you raise the order. So you generally have to wait if you want to do a scale out. Because even if you were to put two different orders in, what happens is they merge into one at the end. So you scale out, it doesn't really actually show up at all. So let me show you here. With the partial position bit here, I just need to put in the point at which I wish to exit this position. Now, if you recall, that was $18.15 because I add a little bit there for the fees. And for the amount, rather than clicking here, I just type in 200 because obviously that is half of the position. So as you can see here, we've got now, if this 18.15 gets hit, I'll be locking in $118 of profit on that position, whilst I will still have 200 contracts selling short on Solana, meaning that is the running position that I'll leave open and trail my stop accordingly to lower highs on the chart. Once you're happy with all of that, you quite simply hit confirm. You'll then see down here it says 2 details. If I hover my mouse over that, you can see that there is a stop loss for the entire position at $19.32, and there is also a take profit for 200 of the contract, which is half of the position, at $18.15. At this point, I can now just walk away. I now know that my take profit, my first order for a partial close is in here where this green line is, as you can see. My stop loss for the entire position is up here, which you can see. My entry price is just here where this red line is, and everything is now taken care of. I can walk away comfortably, leaving this to run, and then I've just got to manage the position. Now, one thing that I will add to this is that it will take a little bit of getting used to. A little bit of time, a few practice sessions, but by the time you've done this a few times, it does become quite second nature. It becomes quite simple. And the hardest part, to be honest, with this is when you're trying to bloody explain it on a video and you've got to remember the steps because I'm so used to doing it in autopilot. It could be more basic, it could be more simple. I'm working to try and find ways to make things more simple for us. But for now, that's how we use Bybit to raise a short order. And this example is on Solana. Of course, the opposite would be the opposite will be true for going long. I hope that helps. Happy trading. I'll speak to you again very soon. Bye for now.